following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 14th. Wonderful Wednesday of the edition of the Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. We do not make that one little 2x4 shift. It means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial in right now, 877-927-6648. You can send me an email, steve@tfnn.com. Just go ahead and put in the heading, radio show question, and inside the Tiger's Den, any ping will do. So let's go ahead and get started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trade up 21 points. She's trading out at 21,348. S&P is flat at 2440. The NDX 100 up 12 points. The Russell down 7. The semis are flat. Gold is anything but flat. It's up $7.80. Silver is up 38 pennies. We're certainly going to go peek in on those. Light sweet crude back $1.75. She's trading at 44.71. Leading the charge here to the upside, you've got Alexion Pharmaceuticals up $9. Google's up 6. Regeneron Pharmaceuticals up 5. Equinix up 5, Amazon up 5, Tesla up 5. We got a lot of fives out there. Of course, I was rounding up and down. To the downside, you've got Biogen, BIIB off $8.67. Alliance Data Systems down 5. Hawaiian Holdings down about $6. Pioneer Natural Resources off 5. SVB down 5. United Rentals down 5. We got a bunch of stocks that are down $5 as well. So where are we going to begin? Well, there's not going to be a lot of action for the next at least 52 minutes. And then the quants will have the ability to go ahead and parse the words or what's missing or what's been added. And then we'll have Janet Yellen out, I think, right around 2:30, 3 o'clock. So it will all be about how the market closes out this session at day's end. The first wave, the second wave, may or may not be the correct wave out there. And so it's really going to be about the end of the day. So speaking of the end of the day, pretty huge move that we saw this morning. I'm being told that it's because of a retail sales weak retail sales in the CPI out there, which just simply went ahead and took gold to the upside, silver to the upside, the yen to the downside. In fact, if we take a look at the yen, we'll go ahead and look at the currency pair. There is a 15-minute delay here. But what is important to pay attention to, so those that are gold bulls, right now we'll have to call it neutral. But for those that are gold bulls, what you want to see take place is you want to see this yen currency pair continue to head south. In other words, get stronger. If we're looking at the futures contract, we'd be seeing price head in the opposite direction. But what price actually did here this morning on its move down was it came back and it tested its weekly bottom of that market profile. That is at the 108.87. Did it hit 108.87? No, it hit 108.92. But what you want to see is a close below. For those of you that are gold bulls, you want to see price close below 108.87. So at this stage here, just simply because of the directional correlation between gold, the 30-year Treasury, the T-bond futures, mining, What we know about the yen, which I believe is the dog and not the tail out here, it's come down to support and it has bounced off of it. If it bounces off of it, then what you're going to see is you're going to see gold give back its gains, silver give back its gains, and 30-year Treasury give back its gains. If it crushes through this weekly profile, could start a very large A to B equals CD to the downside. That'd be very bullish for bonds, the 30-year, very bullish for silver, the mining equities, and gold as well. So we say here, and take a look at this market profile, that prices just simply moved down to a level of support. Let's go see what's going on in metals land. Let's go take a look at the contract for silver. Interestingly enough, it's trading at 17.15 right now. Stevie's red line is 17.15. So far, if we didn't have Janet Yellen out here, because I don't really know how the market's certainly going to respond to whatever the Fed decides to do, most likely raised by another quarter point out here, all that silver has done is run up into a level of resistance. It still has that falling price oscillator below zero. It's a bearish setup. Closing back above it will push it back to neutral to bullish outer. Just depends on how it closes. But as we speak at 112, this is sitting right at resistance. So the yen sitting at support, silver sitting at resistance. If we take a look at Goldilocks, well, we're closer to the bonds. Let's go take a look at the 30-year first. I believe we are sitting above its, we are well above 154.67. So in this case here, what bonds are communicating to you and I, 112. I don't know if it's correct, if they are correct, but you have a rising price oscillator above zero. It's very bullish. So this would say you could easily see the A to B equals CD pattern that could unfold here. So the A point, here's the A, the B, the C, giving you a price. Oops. Let me put that in there, make sure there we go. Giving you a price projection, the 158 level out there. So bonds as we speak at 113 are very bullish, not just because of today's price movement, because what they have been able to do to that price oscillator above the zero line out there. If we go take a look at gold, see what its message is, see if it's up against resistance or where that resistance line is or where it is that you want to be able to have a good end of day feel. There we go. Let's get the contract up on the screen here. The August contract, voila, there we go. Come on, populate. Oh, son of a gun. How about that? So you've got gold trading out at 1276.40, and 1276.40 is Stevie's red line. Now, gold is not below, the price oscillator is not below zero. So this just says could be some more retracement out here. But right now, its call is neutral. I would have to say the yen is neutral. Silver is neutral. The only thing that is not neutral out here, maybe bonds will get back there by the time Yellen is out, is the 30-year. But otherwise, you've got these three currencies, if we're going to call silver, gold, and the yen currency pairs. They're all just sitting right where you would think that they would want to sit to await the Fed, the minutes of or the Fed statement. Just the Fed statement, then the Yellen interview out there. So look, when we get back from this break, assuming that my internet connection is still up, we're going to go look at this chart. We're going to go take a look and say, hey, the last couple times the Fed has increased rates, what's happened to the market or gold or bonds? Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So just to complete a thought inside the Tiger's Den, if we take a look at the natural gas contract right now, the only level of support that I see out here to conclude that a bottom could be in, you'd have to go take a look at the 60-minute profile. And what price would need to do, this is a bullish structured box with support at 292. That level has not been tested since right around the 9 o'clock time frame out here. So what you really need to see to confirm a message that a bottom would be forming would be two things. You need to see it close above the top of the box, 296, not a test of it, not a spike above it, but a close above it, 2.968. And then ideally, you would like to see a brand new profile form above the prior one out there. So that's simply to complete that thought. Not a random thought, by the way, but still a thought. So I mentioned interest rates, right? If we take a look at what the Fed has done thus far, we've seen 3 interest rate rises, right? We saw one on December 17th. We went up to 0.5%. We saw one on December 14th, 2016, when the Fed went up to 0.75%. And then we saw one on December 14th, 2000. Well, that wasn't December 14th. When was it? That was March 15th, I think it was, or maybe March 16th, March 15th. Let me change this date out here. I think it was March 15th, but 03-15- somebody in the den will go ahead and confirm that. I think it was the 17th of March where the Fed went up to 1%. So will today be the next rate rise? Odds favor it, but here, this chart here where I'm showing the actual rate increases is on the chart for the S&P 500. So this is a chart for the S&P 500. So the first time that we saw rates go down, we saw an initial move. These are, by the way, we look at the S&P. These are closing prices. Doesn't really show you the intraday spikes out here. But what we do know is that price moved down on the very next trading session, December 18th, closed down, and that was it. And then price moved higher for a few days into the end of December before things really let loose into that nice bottom that formed in February 2016. Now, the normal pattern for the markets is for the markets to move down into the end of January, early part of February. So that was really right on schedule with regard to normalcy. I would say that's more of a driver than the interest rate increase out there. If we take a look at then the December 14th rate increase, December 14th, 2016, we saw just a slight move down that day, closed down. Then prices moved higher. We really went sideways for about a period of until about January 24th. So it was really a period of more than 3 weeks, more than 5 weeks, 4 to 5 weeks, where prices inside the S&P just simply went sideways-ish. Did it go? There was one pullback that took you to a price level. Well, I don't know the exact price level. It looks like the close was around 22.35 versus about 22.70, so maybe about a 30-point increase. But then prices just simply motored on, continue moving higher out there. That was during the time period here again. Right, this is in December, January, where you anticipate prices are going to move lower. They did not. They made their bottom on December 29th. There never was a pullback, as you know, in 2016 out here. Never a substantial pullback out here. Well, I should say 2017, right, because this is the end of 2016. We then saw the next rate increase back around March the 15th. March 15th, March 16th, I think it was the 15th out there. And, in fact, that did cement a short-term high. We then saw an A to B equals CD to the downside that formed. That took us down into lower prices into April, and it's been to the upside. So the question is, in taking a look at this, is there, and we are in the unfavorable seasonal cycle. There's no question about it. We are in it for a period of time out here, several months. What does this chart say the S&P 500 is likely to do? It's likely to close a little bit lower out here. I don't know whether it's a ton or just a little bit, but is it the end of the bull market? Look at how the market has responded with these interest rate rises. This is no different. And when I say no different, this is no different than the period of 2004 to 2006, where the S&P went through, I don't remember, 17 rate increases during that period. Maybe it was more than 17, but I think it was 17. And the market, the S&P 500, and eventually just sloughed it off and continued moving higher out there. Is this time going to be any different? There's a lot. The great news is there's a lot of people that believe it is. To me, that doesn't get more bullish than that. Who's not looking at these charts out here? It certainly isn't because of the Fed. It is not going to be because of the Fed that's going to go ahead and croak the market out here. It'd be because liquidity would dry up, but we don't have a market where we have a lack of liquidity. We just don't. Now, what does it mean for Goldilocks out here? This might be more interesting to those of you to take a look at what happened when we saw those rate increases. Interestingly enough, on December 17, 2015, gold made a bottom. Yeah, made a bottom. In fact, that was a significant bottom. That could be the bottom that cemented the bear market, if you will, or the pullback in gold. Because what we have seen basically since then is, you could say, a nice trend to the upside, a nice Gartley buy pattern that formed out here back on right around the December 15th time frame. Lo and behold, December 14th was when we had the next rate increase, and gold went ahead and shot up from there. Maybe different than what one might think, because many people think the rates are going to increase, gold's going to get stronger. I mean, the dollar's going to get stronger. That's going to croak gold. Look, you guys look at the facts out here. The U.S. dollar index, the only impact it has on gold is what is the yen doing. It's not the other, and not that those other 5 currency pairs don't impact it, but it's really all about the yen. You know that. I know that. Dave Mason knows that. Let's take a look at the next time. This is actually quite bullish. Now, the question is, are these quants, whatever's going on that move gold and silver higher, do they know something that, okay, so there's maybe something, does somebody hack in to the Fed, and somebody's got the statement already ahead of time? I don't know. But if you do take a look at that March 15, 2017 rate increase, that was the next bottom in gold. So in essence, we have seen 3 rate increases, and each of those have marked a bottom inside of gold. Right now, it's just sitting at the neutral point, just as silver is, just as the yen is sitting back at neutral. So you'll want to watch the yen. That'll certainly give you the confirmed clue out here. Yes, like an Earl clue. And and when I look at this chart and we take a look at, how's the S&P going to move? Is that where the big trade is? It probably isn't. The big trade is probably with regard to Goldilocks. At least it has in the last 3 instances. I don't know if 3 times is the charm out here, but we've certainly had 3 times out here. So we'll go see. I won't be with you because I'll be off the air by then. But maybe it's 4 times is the charm out here. We got the 30-year Treasury up on my screen right now. Is it going to be as impacted? There's probably no larger move that we'll see today than inside of gold and silver. So how do you like them there, Apples? Am I willing to go ahead and say go long gold? No, we don't really need to, do we? Because if, in fact, it is a bottom, if, in fact, it's going to behave as it did last time, why do you have to be early on the trade? These were large moves to the upside. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. NADEX, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, NADEX allows you to trade directly through them with direct market access when using their trading platform. NADEX never charges a fee to use their platform, which even includes real-time charts and full customization capability. NADEX's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. NADEX's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the NADEX banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the question is the SLV, that's the ETF for silver, is it making an A to B equals CD up in the daily chart? And if we go so here's what we know. Again, just to summarize for you, if we were going to say what markets are going to move the most out here with regard to the next rate increase. Thus far, what we have been able to identify out here is it has been gold that has moved the most. And for the most part, really in the opposite direction. Are the two correlated with each other? Well, we know that the correlation is going to be the yen, so you want to be keeping an eye on that as well out here. But it most certainly has been the larger move. Treasuries have moved higher. There's no question. And the stock markets have pretty much shrugged it off. So they've continued to move higher. That's going to remain the same pattern out here. It just is. There's not anything you can do about it. There's nothing I can do about it. It just is the way that it is. But the trade out here to be paying attention to may be that SLV trade. Certainly has been gold over the last 3 times. If we go take a look at SLV, though, in this case here, is there any clue that this is that yesterday was the C point, so to speak, of an A to B equals CD? We just don't have that clue. In fact, if we look at SLV right now, the part of the answer would certainly come. It's just like taking a look at the silver contract. What the SLV has done is found resistance at Stevie's red line. That looks like that's priced at about 16.24. You really want to look at the contract versus the ETF, but you can see how closely close they are to each other. The message is that silver did a 0.618 retracement. So let's go take a look at that out here. And this retracement, I don't know, are you referring to the May 9th high down to the to the June 6th low? So it does about an exact 0.618 retracement. You've got a nice bullish signal today inside of it with the gap to the upside. So that's a bullish outlook. The A to B equals CD that's being, I believe, looked at is this one down here with the A point being May 9th, the B point being June 6th, and yesterday being the C point. Taking silver back up to its most recent set of swing points, one from April 13th, the other from February 27th. So is that a likely outcome? I'd say yes. Would you put on that trade before was there any reason to put on that trade before the Fed releases its minutes? I don't want you to take that last chart out there where we took a look at the way that gold reacted to the Fed's decision to increase rates out there. I just wanted to be able to, my objective was to go back and say, well, what happened? What happened in the market when the Fed increased rates? Is there any? That's the high probability trade, no question about it. It would just be better if silver had a rising price oscillator above zero, much like gold does. So I don't know the answer to your question. It sure looks like it. It sure looks like it based upon the prior responses out there. So I hope that helps you out. Question out here says, wait for the Fed first. Wait for the Fed first, I think. Maybe put a buy stop in, so it picks you up along the way. The move in gold was not like a one-day wonder. That move in gold lasted for a while. So I think you can afford to pay, it's like an insurance policy. You can afford to pay a little bit more here. If it truly is going to be the next short-term bottom out here, you're going to be able to catch it whether you buy into it today, tomorrow, or the next day, as long as you use a wide enough stop. Okay, another question. The S&P seasonal pattern that is governing price these days. Please, the S&P. The seasonal pattern that is governing the markets right now is this one right here. At least what I would call this one. This one being the annual seasonal cycle. And we're locked inside this time period where yesterday should have been a bottom in the S&P 500, with Friday being a top prices moving down through the following Friday and then moving up for about 3 weeks into the end of July. The normal season towards the end of July is to see the market then go ahead, truly take a summer vacation, and watch the market drift lower. Sometimes it drifts more than just drifts lower, but it moves lower into about the October 13th, the middle of October timeframe. You use these dates as guidelines, just like Jack Sparrow or whoever Captain Barbosa would say. You really kind of use these as guidelines. Sometimes they work right to the day. It never surprises me when they work to the day, but you really want to go ahead and use these as guidelines. I have some certain specific criteria I'm looking for that will tell us whether or not this last leg is the one that's more important versus this leg, the July through October timeframe, whether that leg is going to kick in or not. I know there's guys out here. I've seen them floating these charts out here with the 10-year charts. I saw the 10-year charts in 2015, then 16, and 17, and 18. You know, and it ends in a 7, ends in an 8, ends in a 5, ends in a 6. Okay. A lot of those charts that I see out there are really, they don't have 85 years worth of data. Number one, and there's several years that you've got 87 in there, anyway, 2007 in there. Okay, I get that picture. We don't have those same patterns though that existed back then. We did that workshop. You and I did that workshop where we identified when major bear markets start and the patterns that are out there. That's patterns that are there for every one of those. They're not present right now. The only thing they have in common is a rhyme. Ends in 7 as a kind of a thing out here. I don't think we're going to see this pullback. I don't think we're going to see the July to October pullback. Instead, I think it's going to invert. And I am not a believer in inversion, for goodness sakes, out here. Inversion from a tax standpoint, but I don't think we're going to get that. We're going to find out soon enough. Certain key levels can be broken, and then we'll go ahead and change our mind. We also, back in 1987, back in 2007, other things that occurred there, you didn't have the New York Stock Exchange at new all-time highs in its advanced decline line. You just didn't. It wasn't that way out there. So there are so many other patterns that exist in the marketplace that say, you know what, not so fast, and not this time. Of course, time will tell. I wish I could tell you the future out here. Speaking of the future, if we go take a look at the equity, that was a pretty smooth transition, was it not? If we take a look at the equity futures contracts out here, you've got the ES Mini right at the top of its daily level, 24.37. We're trading at 24.36 1/4. The Dow it's got a mind of its own. It's just off to the races. Same thing with the Russell 2000. We're just looking at daily. The only place where I'm looking at a weekly right now is inside the NQ out here. But we know the NQ was just simply forced selling. You had a fund that needed to liquidate $8 billion, and they were focused on the high-tech area because of the redemptions that they have going on in their bond fund, but inside their fund. That's all that was. That was it. We talked about that yesterday. If we take a look at just simply advanced decline oscillators, we really won't know until the end of the day. And even if there's a bit of a pullback in the markets, so what? It's to be expected. It's kind of normal. The question is going to be Goldilocks. What is Goldilocks going to do? See Rhodes with TFNN.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So, look, if the Dow closes down by over 200 points today, it's up around 15 points, give or take. And specifically here, we'll go ahead and give you the figure. I would say if the Dow were to close down below 21,258, you're at 21,342 right now, so it doesn't even have to do the 200 points. But if you close down below 21,258, I'm still going to make it 200 points. Needs to close down below 200 points. Then we've got a bit of a route, a bit of a market to the downside, probably just for a few days or something. We'd have to look at some other indicators. Inside the ES Mini, watch the price level of 24.2775 out there. Price pullback there, bounces off that trampoline. Don't get in the way of the bull market. Close below it, then you're back to test out the lows from last week on the, 9th? Yeah, June 9th out there. That you could make that case. Inside the Russell 2000 equity futures contract, watch 1409.73 out there. If by any chance the market takes off to the upside, and you see the NASDAQ close about 5889.75, you're at 5768 right now, so you're looking at about 80 points to the upside. I can guarantee you, as much as I can guarantee anything, there is one side of the trade you do not want to be on, and that would be the short side of the trade. Because if, in fact, the NASDAQ is able to do that, it is back off to the races. Jump to the long side of the trade or just get out of the way, because that would be the clear, unequivocal message out there. Okay. I don't have any requests out here, either from viewers, listeners, of course, or Denners out here, other than a request for the BGs. And let's go take a look at ticker symbol BG out here, see if there is such a symbol, and see what, Bungie Limited. How about that? Let's go take a look at Bunge. I don't know, is it Bungie or Bunge? Bunge Limited. But if we do take a look at Bunge Limited, no, we'll go take a look at the GDX out there. We sort of covered it, but not specific to the T. If you gotta like BGs out here. BG, big wide price spread, accelerated volume. It doesn't get much more textbook than that. Back on the trade day of May 23rd, 9 million shares to the upside out here. So it's just been pulling back on light volume. Now, it's trying to find support at the center of the box, and I mean truly the center of the box of that weekly chart out there at the 76.85 level. If you wanted to buy the BGs or just sing some of their tunes, you'd rather go ahead ahead and sing them from $73.40 out there. That ought to be a nice level of support for you. That is ticker symbol B and G. The request was, can we go take a look at the GDX? So we most certainly can. Inside the GDX, if I take a look at the GDX specifically right now, what's its message? It's got a nice message for you. It's trading at 23.12. Stevie's red line is 22.99. The price oscillator bottom panel is above zero out there. So if we didn't have the Fed releasing its decision, then Janet Yellen doing a little question and answer period out here, and it was just a normal day, the message is that the GDX is bullish. That doesn't now. It's really been kind of trading, not kind of, it's been trading sideways. So you'd have to say, well, how bullish? And if we go back, this chart's a little bit easier to see out here. You can see the sideways action. The top of its weekly box, 25.35, in essence is resistance. The bottom of its weekly box, 20.71-ish, is support. So it has been trading in that $4.50-ish type consolidation level. Now, the beauty there is that any break above, we'll call it 25.35, or below 20.71 should end up being a measured move equal to that $4.50-ish type cent level. And I know it's not $4.50, but it's close to that. That's what you would be looking at. Now, what you'd really be watching for, Dudette, is a move above the swing point from February 8, 2017. Has 41 million shares. If you get above that with more than 41 million shares, is a fairly large A to B equals C to the upside. So that is your GDX out there. Okay, no other requests, but please send them along. Happy to look at what you want to look at out here. It'll really probably more be about tomorrow. Volatility index, what's its message out here? Not much. It's up 23 cents, no big deal as we speak right now. What else? Let's go look at some of these equities. Let's just go do that. How about Regeneron Pharmaceuticals? You were the one that pointed out the consolidation breakout. That gives you a price projection inside of Regeneron Pharmaceuticals to the 557 level. You're at 479 as we speak right now. Everything is just nice and orderly when we take a look at this stock chart here. You got daily profiles forming above prior daily profiles. You now have a weekly profile this week forming above the prior one. It says you've got some resistance at 489, but a close above 489, it is off to the races. Those races, again, taking you eventually into that 556 level, that measured move out here. That is Regeneron Pharmaceuticals. REGN is the ticker symbol. If we go take a look at Alexion Pharmaceuticals, a nice gap to the upside today with good volume. So far, 7.2 million shares out there. What is it doing? Well, I tell you what, it doesn't have any real resistance till it gets back up to its swing points. It's above all profiles. So that is a beautiful thing. If you were to ask yourself, where is Alexion Pharmaceuticals headed to, ALXN, you know you would be looking at that May 2nd swing point. You would say that is the wall. That's where it's headed to. Anywhere between the 133, 130 to 133 type level is likely where Alexion Pharmaceuticals is headed to. If we look at what else is moving, how about that Tesla? How about that Tesla up $6 buckaroonies out here? New all-time high again today. It's just completing its consolidation pattern out here. Right? You can see the consolidation. We just moved the box from the consolidation. Let's see if we can do this here. Here's the consolidation that it was in. And we just moved it and said, okay, well, what's the price projection? So for your friends at home who are wondering, hey, where's Tesla headed to? You can say Stevie told them 396 and change out there. Because consolidation breakouts are measured move equal to or greater than the consolidation. And don't you know what that does is that just simply takes you and I back to the NDX 100. Whoops. You just got to put it on a monthly basis because you are convinced about those consolidation breaks. Are you not? You most certainly are. And if we were to go take a look at it, I'm just going to have to repaint this picture because for some reason it's not on this chart. It must be on some other chart out there. There's our expansion, that 59.10 level that was hit. But is that it? Is that it for on the longer term? I'm not talking about what's going to go ahead and take place, over the next couple of days out here. I give you, I give you my best estimate on what the market is communicating to us, but really, it's more about the long term, is it not? If we can get the long term right out here, it makes for a much better, smoother sailing. So there's your consolidation pattern inside your NDX 100, whether you like it or not. And where does that say price is headed to? Up 8,500, and you're only at 57.60. It's going to be one heck of a run out there. And what you want to hear on a continuous basis from well-known guys like Gunlock and others is that it can't be done. That's what you want to hear. Steve Rhodes with TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So for Top Dog inside the Tiger's Den was identifying certainly a breakout pattern, a confirmed A to B equals CD pattern inside of Johnson & Johnson. Now, this is taking a look at the monthly chart out here. And this takes us really all the way back into the 2009 bottom. That's your A point. Your B point out here was a move all the way up into the November 2014 level, 109.49. That marks your B point of the A to B equals CD to the downside. Then we have your 2015, your August 2015 bottom out here, and that retracement only 43%. And to the extent that we thought that the move along the A to B leg out here from 46 to 109 was a strong move, it's nothing compared to the move off of the August bottom out here. This one is stronger. So even though there's a 1-to-1 price projection, J&J, if you are in this trade, 145.03, and from the long-term standpoint, by the way, that B point on a monthly basis was passed with volume. Not once, not twice, but, yeah, 3 times. Yeah, it was 3 times out there. So you've just got like a major confirmation all over the place. It is not 145.03 where Johnson & Johnson is headed to in the long term. It's more like 162 or 184.11 out there. That is Johnson and Johnson out there. Dudette says, okie dokie, it's the battle between me and David White. It's not. It's absolutely not the battle between the two of us out here. And I don't think Dave is necessarily looking for is just really. I've just heard some of his shows out here, and he was kind enough to send me a chart this morning to or a set of statistics to share with me why he's got the bearish outlook. But I don't think that I think we're both taking a look at a couple different time frames out here, because I can absolutely take his data, take a look at other seasonal type stuff, and say, okay, hey, I get it. And look, I'd really like to be able to put on some long positions here come the end of next Friday. I'd love nothing more than to see us actually get that, knowing that we're still going up in that 8,500 level out there. And if we get it, that'll just be great. So I think that David's outlook, from what I've seen, Maria, is more based upon where are options expiring, right, versus where they're trading. At one point in time, I think it was like about an 80-point move. I think that 80-point move moved further north. Maybe it was 50, then it went to 30. I don't know, because that's a cool set of tools that he absolutely has out there to understand that max pain calculation out there. So he's not looking for max benefit for the longer term period. It would be disingenuous for me to look at a chart with you, show you consolidation patterns, where price goes to, and then you and I take a look at it time and time again, and then ignore the longer term picture inside of the NDX 100 as an example out there. So we're on the same side. I'm just really taking a look at a different side of the picture. And you know me, we both put data up here, and the great thing about it, but I think perhaps the single best thing about TFNN is there's not a single one of us that gets with each other to say, hey, what do you think? We all get on that same side. We just don't. And that way you have these. There are times when we are all on that same side of the boat. It's always scary out there, but it's not that scary. And yeah, see, so it's now 10 and 15. At one point, I think it was like about 80 points. Was it not, Polar? And so those figures change out here. But the great thing is what I can assure you is you get our honest read, utilizing different sets of tools to identify where it is that we believe the market is going. And you get to be the judge. You get to be the jury. It's a beautiful thing. We're just glad that you decided to spend some time with us. So stay tuned, folks, because you get to spend more time with another great insight into where these markets are headed to. That's brought to us by our Polar Bear. After that, from 3 to 5, you got Tom O'Brien. We'll see you back on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.